What is going on? Happy Friday. Welcome on into today's Power Hour live stream. We're looking at the S&P right now. I think a lot to kind of dive into here today. Kind of per usual. But an interesting week, to say the least. Let me make sure I'm framed properly here. Yeah, because that was a video where I was like over here the whole time. But yeah, I think we're good. Hope everyone is doing well on this fine Friday the 13th. Friday, October 13th. That is, we are looking at SPY down 0.42. The funny thing is that it was actually looking really good this morning. 5-minute chart, right? Ripping this morning. And that gave out pretty nicely, and then big move down. Have not been able to regain VWAP since. Thing is funny because we are still just hanging around this level, man. We're just hanging around here. Like, yes, we undercut yesterday's lows, and this is a key level right here on SPY, 431 key level. We're hanging around. We did undercut that, came down to just under 430 today, I believe, on that little flash. Not flash, it was a decent dip this afternoon. That came down, 429.90s. So we did see a 429.90 print there, and then it came back up a little bit, a couple bucks, but it's hanging around that blue line. That blue line, right? We bounced beautifully off of that yesterday. Now we're here. Now, you'd think, okay, well, here's my thoughts on it right now. Blue line, right? Putting pressure, lower highs into it, probably going to break down. And it did today. The question is, though, was that just kind of a fake out, or is there, more coming next week? Have to wait and see next week, ideally, right? Because no matter what happens, I guess it could move a lot. No matter what happens, likely it's going to close somewhere around here, so you won't be able to truly judge. But it does look weak, to say the least, for now. It's two weekdays in a row. But if there's a spot to bounce, this would be a logical area. This would be a logical spot for SPY to bounce around this 430 area, give or take a few points. But across the board, the Dow is actually up. Believe it or not, it was up a lot more. Now it's barely up. Holding on by a thread. The Russell is down 0.8, so not as bad as yesterday, but down nonetheless. And the QQQ is down to 1.2, so that's taking a beating there. That was stronger the past couple of days. Now it's taking a beating, and it's down. So we kind of got this like mixed bag of back and forth. Oil's up 5%. Crude futures are up 5%. That's a pretty substantial move. Putting in now what looks to be some little higher lows on crude here. But most other stocks on my list are red. So let's go to the main list and check out what's going on elsewhere. The 10-year is actually down today, although up from where it was yesterday at the lows. So it kind of is probably going to close the week here around 4.63, which there's no one to say yet. I mean, we're talking about this, or we've always been talking about this, I feel, the past couple weeks. Makes sense, right? It's a 10-year, and this thing is pretty important, seemingly. But double top high, like you could have potentially put a top in, maybe. But you can't assume that though, because we pulled back, but we could be like this, in the coming days, for all we know. The reality is that this double top goes in. If we dipped, bounce a little bit, and then roll back over, and then break down below that, okay, now we can talk about the reversal. But we're not really there yet, and so we don't really have any confirmation of that. No way to know. So we're just kind of letting time go out, let time play out, and we'll see what happens on that guy. The dollar bouncing pretty strongly, which is really interesting. Now, in times of, I've seen some stuff on times of war, what happens to the dollar. It tends to go up, gold and silver going up, etc. So there's that aspect of things. But also, it's interesting, if you look at the dollar being pretty strong, that yet silver's up 4%. Right, it's a lot, but silver can move. So, okay, fair enough. Gold is up 3%. Look at this chart on gold. Holy shit. Like, that's a pretty big candle on gold. Gold doesn't move 3% in a day very often. It tends to move a lot less than that in a day. So, very notable moves on silver and gold despite the strength in the dollar. So, the question is then, do these moves hold? Or what gives, right? Is it the gold and silver that give, or it's the dollar that gives, or is it possible that they don't, and they both go up at the same time, which would be pretty impressive, more on a longer term view. So we shall see there. Bitcoin's flats. Natural gas is down 4% roughly. Oil is up about 5%. Risk on stuff up here now. Mostly red, but there's some green in there. Mostly red though. And then elsewhere, oil stocks are doing well. Walmart's up, Target's up, so retail looking okay. Yeah, oil stocks are the best by far on that list. And then tech is probably the weakest. Retail, funny enough, XRT is down. XRT is down. Target, Walmart are up. Funny how that goes. XLU, that's up a little bit today. Utilities, but coming off a massive dump, so some back test there is likely. TLT's up to 87.47. Is that the high of the week? No, it was higher. We did get up towards 88.50, but we're about $1 off the highs, which came on Wednesday. So we shall see. I got this new little feature here on I guess you can react. What is this? Let me see if I can do anything. What is this going to do? I have no idea what's going on in the chat. There's like a little heart or like emoji thing. You can add the hundreds. I have no idea what this does. What's going on, Millen? Greetings. Gold at resistance. Let's see. That chart looked interesting. I mean, the thing is, gold's in a downtrend, so it's getting up there. Yeah. I mean, gold has essentially been trending down, and if you want to draw a trend line, you could. In my view, you don't have to. You've got volume resistance, A, and then B, you've got two highs. There was a lower high there, but around the same spot. So around this like 1930 to about 1950 on gold. That's a key area. We break above that, maybe we're making a push. We'll see, but that would be a good look. These moves, I'd be kind of surprised if they held up into next week. I'll be honest. If gold and silver held up this well into next week, I'd be pretty surprised based on the dollar. But maybe they will, which would be cool. Now that makes me look like a genius. Like, it's very rare that you can play something this good. Looking back, it's insane to think about, but it kind of worked. So I had been in silver. Now this is SLV. I was actually in AGQ. So I was in AGQ. I had bought this thing, a long time ago, and I saw this breakdown like right here under 25. I'm like, get me out. So on this day, Friday, which was Friday the 29th, 2 weeks ago, I sold my position for an 8.5% gain after selling covered calls on it. So it cash flowed me for months, which it did its job. It served its purpose. And then I got into puts. I got puts. Those puts absolutely skyrocketed in literally a day. They went a couple 100%. And then after being in the puts, I got back in SLV just to deleverage it. So I didn't want to be in AGQ to have the leverage. So I got in SLV. So it's not going to move as much. Still sell weekly options on it. And I got back in there. And my average on that, I will pull it up for transparency purposes, because I don't give a shit. I'll share it. 1917 or 1977. So I'm up 5% on that, which is okay, cool. I got 100 shares of it in the portfolio. But I sold a covered call for this Friday at 21. That's going to be, we have less 35 minutes until that expires. If SLV does not push over 21, which it's currently at 20.83, then we are going to be looking at a cash flow there, and then we'll just do the same thing next week. It's good because I'm happy that we got the moves, because now we start seeing some call interest and we start seeing that, okay, now we can sell some more. I sold at the time of the sale, I think it was 6% out the money. I'm going to try to keep it around there. Doing the math, we did the math, and we're like, the percentage return from selling something about 5 to 6% out the money every week on SLV is like 10+%, I believe, on just selling a 5 cent to 10 cent covered call every week, or I think every week we did the math on. It's insane. And that's not counting appreciation of the actual shares, which it could appreciate. So that's the look. But now let's regain that level. So this short, if I was still, I would not want to be, because it's regain this level nicely. I don't know what's going on. I'm going to just leave it alone if I was trying to short this thing. I wouldn't necessarily say it's the best long from like a breakout momentum buy. I don't know. You're still in a downtrend technically. But definitely a concerning short, because we've regained a pretty key level that we just broke very fast. So it could be a little false breakdown before a bigger move up, which we've seen that happen before, right? Little breakdown, and then the thing goes, could. So that's kind of my look on SLV, gold and silver. But concern is that this DXY is strong. The dollar is strong, and it really did. The dollar did what you'd want to see it do from like a bullish perspective, right? It broke above this level, had a couple day pullback, came back to around the same level, undershot it by a tiny bit, but is that a big deal? No. And now it's bouncing. So if this ends up bouncing and breaks these highs, I would be surprised to see gold and silver as strong as they are. Now it's not there yet, so this thing could very well potentially just go like this. Put in a lower high, and next thing you know, it's headed down for the next couple of weeks. And then, okay, now the gold and silver moves make a little more sense. But if it breaks this up to the upside, if it just does this, if it just literally does pull back and then it rips, I mean, I'd be surprised if gold and silver don't pull back. But market can do what the market wants to do. So that's the fun of the market, if you will. What is GameStop? I have a short on GameStop. Of course, that sounds risky as hell, right? Given what we've seen on GameStop, but I think we're pretty safe on this. I won't hold this to the earnings, because earnings are apparently on the 12th. So I got 2 months, the 12th of December. So 2 months from now is earnings. I'm looking for it in the next 2 months. I mean, this thing is looking really good for the short side. Of course, that could all change in a matter of a day, right? For all we know. But breaking down this level right here, 1630 area, 1625, also broke these lows as well. Undershot it, bounced back, found that initial breakdown spot to be resistance, and now it's trending back down. I mean, you can't really make the chart look much better on the short side. It's just like if you had a breakout buy and you broke out, came back, retested the breakout point, and then started to push back up. I mean, that's beautiful. That's like a textbook scenario. Does it always work that way? No, but it works. It's looking good. So I have a share short with a stop loss now. I will move the stop loss. Honestly, I can probably move this down if we break these lows. Like if we break down under this 1440 area, like maybe on Monday or Tuesday next week, or next week in general, I'll move my stop loss to the 1618 level, which will be right here, and then that's it. So I have that in the prop account. So I'm like, there's things like this that I would not really be able to play because, yeah, you could play puts, but, what if GameStop just does this? Like you would still be green on the trade or even break even on a shares trade, but on puts you could lose all your money because it didn't go to a certain level by a certain time, So now I can sit back on some of these and just let them do their thing and let the charts work. And like Target would have been amazing for that. Now, back, not thinking about it now as a play, but Target would have been a beautiful one, right? There's multiple opportunities. I don't know if I would have played this one because that was a pretty big move down off of that, but I would have very, very likely partook in this breakdown here. So, but you can let those work and then you don't have to worry about them when you play shares. So I don't know. I would say I'd be an advocate for that, of playing shares on the short and long side and just being in a prop account if that's the thing, or have your own money in a separate account that's allows you to short and long pretty much anything so that you don't have to worry about options. Removes a lot because you can literally just set a stop loss and set a take profit and just literally leave it and swing and not have to worry about swings and think about them every single day, which is what I feel like I have always had to feel and worry about. Because you add the options factor in there, it just adds like 10. It adds like 10 difficulty to the challenge. You don't need to do that. That's my take. But I don't know. Hope everyone is doing well. I'm curious what everyone else is thinking about in terms of this little market move here. Are we gonna get this year-end rally or not? Do we see trueflation? What does this look like? Let's see what this at today. 2.6. That's a pretty big jump right there in trueflation. I wonder if that has to do with oil bouncing up. I'm curious. But yeah, I mean, we've been kind of just trending down. That's a big bounce. See if it holds into next week. But yeah, 2.4 to 2.7 has been this kind of range the past couple months. Not much movement, but this is trying to do like a real-time CPI. Like it has the government reported CPI, but we have a real-time. So, and I'm not really like that surprised. Oh yeah, you know what? I didn't check. I didn't check the AAII sentiment. The AAII Investor Sentiment Survey. This came in actually pretty bullish this week. Okay, hear me out. This ended on Wednesday. So you didn't calculate, or really you didn't have a lot of time to see after Wednesday on SPY. The market was only up, right? SPY was at 430, like 7 almost. And now we're down a little bit from there. So, but that's not a big bump back, but 10% increase in bullish sentiment, about good like 5% or so decrease in bearishness, a lot less on the fence, which is pretty interesting. People just jumped off the middle and said, hey, I'm bullish or I'm bearish. AMC, Taylor Swift, the Eras Tour movie set to break movie records. Okay. Actually, you know what's funny? I was looking at GameStop as a short because the chart is setting up. By the way, I mean, it's also one of those stocks too that, not that I would just blindly, you can't blindly short without a stop loss, but like as long as the general trend stays intact, like any spike up has been like an awesome short the past like 2 years or the past like year and a half. It's very likely to me that GameStop is probably going to come through and fill some of this area at some point over time. Again, the thing is, who knows how long it takes, and does it do this before it does this? You know what I mean? So you can get screwed. You can't just not play it with us. You can't just not have a stop loss. But I mean, that's what GameStop looks like. Here's what AMC looks like. Let's pull up AMC's chart. You know, you have a very similar look. AMC's big move, and it was just in that downtrend, right? And then eventually got destroyed. Absolutely destroyed around the stock split and stuff. And now it has come back off the lows, but I mean, talk about this thing getting crushed. Now, they did a stock split. They did 2 stock splits? I don't even know. They did a stock split, at least one. Then got crushed, so everyone is underwater, essentially, whoever held AMC this entire time. Bouncing off of 7, came up to about 11, 15, and now it's rolling back over. This is going to be a spot right here. So you got to break through that's like 1350 area. Now, again, the thing with the news about like why it could be boding well, like maybe that's part of it, but we got to be careful too that we don't just assume or have news that is the bias to like why we will stay in if it starts to break down. It's, in my view, like it's down 14% today. It's a pretty big move down. Big picture, it's tough to like look at that and say, it's kind of like 7 holds, as long as 7 holds, okay, cool. And then targets would be up here. If it can break above this 13, maybe you've got some small gaps to fill on the way up. Maybe, but it would need a lot of strength there. So I'm skeptical of that. Seems like it kind of had a little bit of a relief rally right back up into an area that may act as it was an area of support here. Might now be resistance here around this 11, 15 area. So we'll see. What's going on, Lawrence? Guys, see you're using your trading stats to improve that journaling platform. Nice. Yeah, I was the algo side of trading is really interesting. It really interests me a lot. But I think and that's definitely it's probably where the industry goes, right? It's where it's going. It's where it probably already is to a large degree. But I think it's where a lot of people may end up pushing. The question is though, like, how does that go with things, how they change, and like constantly, does it have to be tweaked a lot? Like, I don't know. That's why I think in my head, the algorithm that I at least have more control over, which is good and bad, right? You have your good and bad because you can obviously easily veer off course and do something wrong, right? And then throw off the results. Whereas if you could just have kind of like a robotic approach and, on average make a 0.5% a week, compound the 0.5% a week on an account over time. I mean, I don't really care what the frig the number I start with. If I have a system that's going to do that, that's awesome. But we only have how long does that work, and does that work all the time, right? That's the interesting, I guess, component to it. But yeah, the TradeZilla has been great. I mean, it's not like I want to just sit back and just pump someone's platform or someone's thing, but it's a good product. I mean, like the reality is that the intent behind it is for you to actually improve. Like we can go down this rabbit hole here because it kind of got me thinking about all the people who, I don't want to say necessarily scam, but like a lot of the scammers and the people who try to make money off of, Discords and this and that. So here's like my take on the whole thing. If you're promoting products or your own thing, you're promoting your own thing, it's different. And that's like kind of a separate bucket. But promoting a tool, in my view, that's helpful to you that you use, it's pretty easy to integrate into anything. Like there's nothing in my view that's like from a moral or ethical standard, I guess, like that's necessarily wrong with that, because you use it, you get value from it, like legitimately, and it helps. And so it could actually help someone. Where you find a lot of the reality of following people's trades specifically, whether that's free, whether that's paid through like Discord and stuff, it's actually like, it's probably not helping that person, because what it's doing is you're getting yourself sucked into someone else's head and their bias instead of making your own decisions, whether you realize it or not, subconsciously or not, right? Like it's happening little by little. And then that plays a role in your ultimate development and what you see and how you kind of interpret things. But also from someone who is, let's say, promoting their private thing on Twitter or X, or any social media, how do you get people to subscribe to you? How do you make money? Well, from like a marketing perspective, if your business model is get people to subscribe to my Discord because it's a paid thing, if that's your model, then marketing, great. And so how do you market most effectively is you make outlandish calls, claims, or this that draw attention, good and bad, because if you bring in negative press and positive press, you're going to get more eyeballs. Some people who are not going to say anything are going to go, maybe this guy actually is really good. I'll pay. I'll try it out. And then boom, that's a sale. So the people who make these calls, and even who make these swing calls of like, market's going to crash, here we go, or it's going to rip, here we go, whether they're right or wrong, they're in a win-win situation. If they're wrong, they probably drew some attention initially, and then they're going to draw the hate from people who are like, oh, this guy sucks. You're still going to get attention. You're going to get eyeballs. You're eventually going to get sales and signups. Maybe not as much as if you're right, but you're still going to get sales and signups. If you're right, you can then go on your little, victory lap and talk about how you're the best and everyone else sucks and all the haters suck and all these different things. And then you're going to draw more press, more attention. People who made money off of your call are going to start talking about you. You retweet their stuff. You show all these different success stories or whatever, and that brings a shit ton of people in. So they really there's no scenario there where they really lose unless they're doing something illegal. Like they don't lose, but the people lose most of the time because when you're following someone, I don't know if you guys have probably done that, you probably lose more often than not, whether it's because you are following them specifically. They seemed really good on whatever platform or social media before you started following them. Then you start taking their trades and you realize like you're down or you're break even. You have a good trade, a bad trade, and it kind of goes back and forth, and you're not like killing it, but you're not doing terrible. Maybe you are doing terrible if you start doing your own things, then you start losing big there, or you don't have risk management in place because they're not teaching you the actual fundamental pieces to what they do, if they even are profitable. And they don't have to be, right? So, and then you're sucking up their bias and learning potentially the wrong things rather than doing it yourself, learning about, because really what it is, it's learning about yourself. You don't want to learn about someone else and how they see things. You want to learn how you see things so that you can then critique and craft a strategy around your emotions, your way of thinking, so that, I know when I feel like this, that's usually a bad thing and I need to cut back. Or when I feel this way, or when I feel this, or when I do this, that usually leads to this, this, and this, which end up being much more negative, and I need to cut back on that. But you won't learn those things necessarily by just following someone else. And so you end up not actually getting anywhere, which is unfortunate. But again, it doesn't matter to the person who's selling you something because they have no lose situation, whereas you really have like there's a chance you can follow them and they can kill it, very small percentage, and maybe they go on a run. And it just so happens that you go on a run with them, and then you eventually move on your own ways. You learn from them a little bit, and then you kind of do your own thing, and then you become really successful. Very small percentage, but the majority are going to go, they're going to subscribe to someone after they have gone on a big run. And we know the law of averages to some degree. You go on a big run, you're probably going to have some drawdown at some point. Things are not going to work as well for at some point. That's how the market works. You're going to follow them. They're going to lose. You're going to lose money. And then now you're going to be pissed. You paid them, you lost by paying them, and then you lost your own money again in your account. So you have a double loss there. That's just like the reality of how that stuff kind of works in my head. So you and can you blame the people who are marketing these things? You can call them scammers, you can call them salesmen, whatever, and you can't, because if that's their business, like that's the business. Now it's just like anything else. I was thinking today, like it's just like if I make money selling you overpriced cars, that's what I do. I know they're overpriced. I know how much money we're profiting off of them, but I still do it anyway. Versus if I make money, doing something else and getting compensated maybe I don't know, I'll say more fairly, I guess in a moral or ethical way, if you will. Like there's just different careers and things, like everything's different. So it doesn't really, you can get mad at them and say that these guys suck because whatever, but it's like, okay, like that's just their career choice. Is it the most fulfilling potentially? Probably not. Is it the most rewarding? Probably not, but that's their choice. So, it is what it is. Surprised to see financial sector not skyrocketing after bank earnings. Well, let's take a look. Yeah, it's actually flat here. Yeah, like it popped up and then it sold off pretty hard today. XLF. What's KRE? KRE is doing... That's down a lot more. Regional banks are down a lot more. So it's funny. Well, the earnings thing is like, it's a catalyst. Does it have to make sense? No, it doesn't have to make sense. It's definitely a catalyst, though. Maybe it extends the next leg down for all we know. Barrier to entry is kind of hard. Be a lot to teach. Order stuff is managed by itself. Okay. Trading controls. Or when it doesn't trade. Creating a quant fund, AI-driven fund next 2 years. Nice. Used to be a low float, high frequency trader like all those warrior trading people. Okay. I'm sure you're aware of the whole Atlas stuff. The apparently, hey, I don't know if this is real. I mean, the account looks real to me. But apparently this guy, I got this comment today and I was like, that's funny. That seems like a guy that I recognize. And I'm like, is that actually him? The guy, Mr. Zach Morris, apparently, right? Or Eddie Constantine or whatever his name is, commented this. And there's a video that I made a while back, months, I think almost a year ago, back when Atlas or the SEC was like, hey, you guys, there's like $100 million lawsuit or whatever, $100 million securities fraud investigation, whatever the actual stuff was. You can go look it up. And I essentially just made a video saying, like what happened, my experience with Atlas, because I had been involved in the group as like just like a person who joined it, not really using it that much, but I had known about it, and I was like just kind of using that as a way to be like, yo, these guys are getting caught. They are apparently lying based off what, I mean, it's not apparently, like they literally lied. You can't say that apparently they did. They literally lied. Now it's a game of like, are they going to get actually caught and actually have to do time? I don't know how that whole legal system actually works realistically. I have no idea. What's the chances of that? It's going to be probably a long drawn out process that takes so many years. Then eventually some will get off, some won't, there'll probably be enough on some, but I thought that was funny. That I got that comment today from apparently the guy who was the face of the whole thing. Now it's funny because if you actually watch the video, there's nothing in there that I believe, to the best of my knowledge. Of course, maybe I'm wrong. That is defamation. Like, no. I pulled up the SEC massive report and was like, here is what the SEC has pulled up on these guys. They lied to you. Maybe not all the time, but they at least lied to you at sometimes. And are they going to jail? Maybe. seems like it's possible. That's what the video was, and I also explained my experience with it. And I'm actually pretty sure that the guy, like Mr. Zach Morris, Eddie, I gave him more like kudos than the other guys, because he just didn't really, to be honest, get involved in some of the dirty shit the other guys were caught for. He, pretty much did what he said. He did lie by like saying I'm going to sell at this price, and then he sold a little bit lower, but not as bad as some of the other guys who like wouldn't tell you, or who like just blatantly said I didn't sell and when they did, or whatever. All these other things, or saying that they're literally scamming people of their money, like literally quoted out of the guy's mouth. That's pretty bad. If you ask me, pretty bad. But I don't know. I thought it was interesting that was a comment that I received. Now, if that's actually his account, that's funny. Hopefully he's doing well. And I honestly hope that like if he actually didn't break any laws and he's like, dude, get off. Like the video is just explaining like this stuff happens. It can happen. People get caught. I don't think all those guys did it to the same degree. Everyone had their own kind of choice to make because they all kind of knew what they could do, the power that they had in their hands or on their phones, right, from a tweet. So that was that. But, curious. I haven't seen it. I looked it up. There's like no news that I've seen. So I don't know how the stuff's going in court and stuff. Either way, interesting story and interesting development, potentially. Bigger picture. But I think a lot of people came from the low float background and playing that stuff. I've just found that I like the larger stuff. I like the larger caps. I like how they move better. Applying similar stuff, similar strategies to it. But I like how those things move, and the moves are cleaner, and I don't have to worry about like a news spike or offerings and shit like that. I guess that you could, but less risk. So. Relentless Trading does. No, there's a lot of different ways of there's the swing guys, and then there's the momentum breakout stuff, and then there's like the data. I was in a group, what's it called? Prosperity Trading? David Kang. Is that his name? I think. Back in 2019 into 2020. I was in that group, and so I'm familiar with what they were doing, and that was a momentum on small caps. Everyone had slightly different styles in there, but small cap momentum was what they did. And it was fine, but I gravitated more towards the swing side of things as I liked that better. And I got decent at it for the market conditions. And then 2021 and 2020 and 2021 happened, and it was like just a mess. So like you did well, and then just like everything got wrecked. Like the same stuff that was working absolutely did not. And then it's very tough to play. So I think it's much more of a seasonality type of thing where you got to play it from a swing perspective. I'm going to get ready to start getting into some now, but it's a season by season thing where you don't want to overstay a welcome, and you don't want to be caught in some of these massive drawdowns on some of these things. Because what the reality of these small caps do outside the momentum plays, where are they headed? Right? Here's some of these daily charts. Like they're headed for the gutters. They're headed to zero over time. But inside of this movement to zero, if you catch a little spike like this, that could be 100%, or at least you can catch a piece of that, or sometimes they spike a lot more. So that's why I think is cool about the small cap swings. You play them with small size, and then you just, the risk rewards, generally what I look for is like 30% risk for, 50 to 100% reward or more. I had a couple last year that were like 600%. So, but there's no way to know which ones and when and stuff. So you can't, like the whole Atlas stuff, like those guys had followings and stuff where they could pump them. There's no way to know, like realistically, which one's going to be next, which one's going to make the 600% move, which one's going to do 50% and then come back to zero and then go back down to zero. So it's not as easy as maybe as some people make it look. Large cap equities 2, 30 plus equities to look at, about 40 strategies. Okay. Like for my day trades now, I just focus on like 10 stocks. So it's a couple large caps and S&P and NASDAQ and Dow. I don't really trade the Dow that much, but then the Russell. But that's cool though. I want to pull up some of these large cap charts on the dailies and see what they look like. So let's take a peek. Here's Apple, still in the downtrend. Adobe was really strong past couple days. Adobe hit a new high here. That's interesting. Could be headed back towards 500-ish, but strong. AMD broke out of the downtrend. Pretty big downside day today. I had a short here on AMD. That was my trade today. Looking back, man, that was a freaking good trade. I could have still been in. Still getting the wrinkles worked through on how I want to be, like how I should be scaling in and out of positions with the new broker and stuff. So we're working on it, but I think we've got it like fairly decently dialed in. But that's cool. I mean, I got to figure out too, the other part to it is stops take profits, because it's tough to calculate the R multiple when, I guess you don't have to calculate it, but it's tough to calculate that. It's more about the data, what the data tells you. All I care about is, at the end of the day, what's my average winner? What's my average loser? Okay. If I average $100 winner and a $45 loser, that's pretty freaking good if you ask me. And if I have a 50% win rate, flip of a coin, that's still a great strat. It's still a profitable system. You're good. But you can have, like for me right now, this month, you've got a situation where I have a P&L so far on this account, or I guess 2 accounts, of almost $500, but my win rate's sub 50%, but my average win loss is so good. Like my average winner is 80.6 and loser's 44.5. These numbers are probably going to go up as I'm now playing with a little bit larger size, or I can, and I probably should, but concept's the same, right? It's like, this is a pretty cool way to view it. And then you can scale it from there once you have consistency. I haven't traded my strategy for an entire year yet. It's going to be, we got to get to the spring, like the early spring of next year, to then I can have a full year's worth of data to go off of. So we'll have a lot more based off what I've seen. It's not necessarily, I don't want to like pigeonhole myself into saying like, oh, don't trade during the fall or don't trade during August and September. You could. It's more so if you have periods of massive moves, like we have to kind of just weigh the pros and cons of it. And so it's momentum based. And so I have to realize, like, if I'm, doing well May, June, July, which I think I was, at some point things are going to consolidate or slow down. And they definitely did the past like 2 months from how the strategy was working. It's actually kind of done well this month so far. We'll see if it, holds up, but even that, it hasn't been perfect, but it's done decent. So after you go on nice runs and the market's made a big move up or down, right, we have to understand that there's going to be some consolidation. And the S&P is not the perfect example of that. It's more so chart by chart. Like you can look around and say, I don't know, like, am I interested in playing like Apple, or let's look at like, I don't know, like a Tesla or something like that as an example. Are you very interested? Tesla does this. Now, I don't know where the top's going to be, but it's made a big move. Like, am I expecting Tesla to keep going forever? It's probably not going to. You play it until it starts to run out. Once it starts to run out and Tesla starts falling back into here, you're kind of in the middle of you're kind of in no man's land. Let me get rid of some of these lines. When I say that, is I mean, like, you're not near a lot of these relative highs or lows for like breaks to the upside momentum or to the downside momentum. You're kind of in between. So if you're in between, it's a good time. And in my experience, the data's told me this, like, it's not a good time to trade it, A. And then B, if more than one chart look like that, it's totally a time just like tone it back or focus on something else, and then just kind of have this in the back burner and maybe swing or, look in different sectors, because this is not the move. That said, Tesla, you can make the argument now, I think. Let's see. Can we draw some lines here? Can you draw one from here? Oh, shit. You kind of could if you want to. Yeah, you more than kind of could. You definitely could. So you got a little bit of a wedge on Tesla. I would say if you break down here, nice, volume gap to fill back down towards 200. So we could be headed that way. But again, you know, you gotta be careful because just like you gotta wait for the break. Because as it could be coming down, doesn't look good. Could be next week. You're right here. You know, and Tesla's got earnings next week, by the way. So I would not play earnings. I would not play Wednesday's earnings. So chances are like Tesla Monday, Tuesday, maybe, but like even Tuesday is risky because it's probably not going to trade very, very nicely. Maybe it does. You never know. But then Wednesday's a day. So earnings comes out Wednesday. And we'll probably get the direction of this break, up or down, off that earnings. So that's what's going to be, we're watching, I guess, going forward. We'll see. We got 4 minutes to go until close. Posting a trade recap here in like 15 minutes. Yep. SMH, semis are going to hit pretty hard today. Down 2.5%. NVIDIA, AMD are some of the weaker names. Downtrend right there. They look good. Semis are bottoming nicely, and it's actually made a nice move up, all considered, compared to the S&P. Like this is SMH. Here's SPY. I mean, that's fine. I guess it's fair. I guess that's fair. So sentiment came in more bullish than what we thought. Silver's killing it. Oil's up 5%. That's a big move on oil there. Big move on oil there. Concerns about escalation of the war. Oil notches largest one-day gain in 6 months. Wow. U.S. boosts enforcement on price caps of Russian exports. Some of the news on that. It's a big move there. Key spot on this is going to be kind of like regaining 88. Right here. A little volume area. Regains that, you look good for maybe a push to highs. If you can't regain it and you roll back over, need to break down below here for me to even start considering, you know, a nicer look at a trend reversal. That's what I would say. But if you go across the board looking into like next week, the place that I would be most concerned about, or maybe not concerned anymore, I'd be most interested or excited is in downside is IWM. So IWM, I mean, I don't, you know, it's on the brink, I feel like. If you see some further market weakness, this could have a big move down. I mean, we're talking like we're $8 away from bear market lows on IWM. And what this could look like to some is just a massive, you know, bear flag. Move down, consolidate for many, many months, eventually break that consolidation for the next leg down. So you could be looking at that, and I would not be surprised if that's what we have. But inside of that, on the daily, what do we see? Inside of that, I see an opportunity here for a smaller scale breakdown. So under 169, I mean, I'm going to put an alert there so that I am aware of it. I might actually up the price of that alert, by the way, just so that I catch it a little bit early. My eyes at least catch on a little bit early. Crossing down. So under 169 would be a low of this fall. And then you're talking about like very low wicks from March and May as maybe some last ditch support, but then the next like bigger supports are down the mid to lower 160. So you could get a nice move if we get a good red day next week. I mean, IWM would have to be the focus for the short side, or at a minimum, you know, some of the stocks inside the Russell. You know, I'm sure there's some charts inside of Russell. You can look at that. Where, let's look at that IWM top holdings. Let's see. Market just closed, by the way. SMCI. Let's look at SMCI, how that chart looks. That's actually holding up pretty well. Well, the thing is, these all have super small weights, so you know, you never know, and I don't know how well these stocks trade, you know. So that's the thing. Let's look at some random ones here. That's also strong. It's funny how that works. So maybe the top names inside of the Russell are strongest, but then the rest of it is weak. Yeah, I don't know. Interesting. Well, GTLS, I'll look at that one last. GTLS. Just going off the top holdings. Yeah, it doesn't look terrible. Okay, maybe not as clear as we thought. But with that said, the market is now closed. Let's look at FinViz and wrap it up. FinViz. So we have 35% gainer day, 62% decliner roughly. Dow's up 0.12, NASDAQ down 1.23, SPY, S&P up 0.5, and the Russell down 0.8. With that said, thanks so much for watching, hanging out. I will wrap this up. I'll have a trade recap up in 15 minutes, and I will see you guys next week. Peace. Have a great rest of your Friday, the 13th, and a great weekend. Lots of football to watch.